Happy Monday once again, everyone. Bryan Devore of the Devore Realty Group, Berkshire Hathaway Home Services, California Properties, with yet another Monday market moment. This week, we're going to be talking about how the market is entering uncharted waters. Let's talk about the latest stats and how it leads into that. Right now, we have 2,952 homes for sale throughout San Diego County. That's 92 more than we did last week. Median list price, $1,050,000, which is lower than last week. Average days on market, no change, 47 days for the homes that are on the market. Pending sales, 1933, 98 fewer than we had last week. Median list price, $825, no change from last week. And the average days on market, also no change, 23. Months of inventory is going up. It's been going up for the last several weeks, 1.59. So it's creeping up. We're not seeing 2-3 months of inventory, which is still seller's market territory. We're still there, but it is going up. Here's the chart that shows total actives and total pendings. You can see the gap is widening just a little bit. Since last week, we did see 627 homes come on the market last week, 22 more than we saw the week before, with a median list price of $895, higher than last week. New pendings, 332, 5 more than we saw the week before. So why is it that we have way fewer homes in escrow right now than we did last week, but we had more homes going into escrow last week than the week before? We'll answer that in just a moment. Median list price, $822, up from last week. Average days on market, 20, one more day than last week. New pendings listed within the last week, 22, and new pendings listed within the last 2 weeks, 165. So 7% of homes are selling in a week or less. Half the homes are still selling in 2 weeks or less. Since last week, we did see 369 homes close escrow, 95 more than last week. So closed sales were way up, which is why total pendings were way down. They closed escrow, which is great to see. Median list price, $849,995, slight dip from last week. The median sales price, $865, also a slight dip from last week. Average days on market, 2 fewer days, 17. And least expensive sale was an El Cajon, $182,000. The most expensive sale in Encinas, $11,500,000. So here's a chart that shows new active, new pendings, and new closed sales. Inventory did creep up. Pendings stayed about the same, a little bit higher, but closed sales jumped up from last week, which was great to see. And here's a chart that shows the median list price and median sales price still kind of bouncing around the same level. So here is the Stephen Thomas Reports on Housing report that shows our active listings year over year. You can see the typical peak between July and September. And what's interesting to see, most of these lines go down this time of year, but we see fewer homes coming on the market. Inventory starts going down, but not this year. We're seeing inventory going up. At the same time, our demand, which is number of homes that sell over the last 30-day period of time, is also going down, which is normal, but probably going down a little bit faster than in years past. The trajectory does seem a little bit steeper than it has in other years. Here's the breakdown of the homes for sale and what price categories they're in. And you can see that we still have way more demand than supply for homes that are priced $1.25 million and below. So 37% of the current demand is in the 0 to 750 category, but only 26% of the supply. So only until we get to the $1.5 to $2 million category do you see more supply than demand. We still need more lower priced homes. And here's the sold report that shows different cities and what homes closed for. This is for the month of July, kind of a lagging number. But you can see in some of the areas, more homes are selling now than they did last year. In other areas, fewer homes are selling. You can see prices are kind of bouncing around a little bit. Sales to list price ratio, 103, 101, 102, 102. So still in several areas, prices homes are selling for more than what they're being listed for. So we talk about uncharted waters. Kind of summarizing, inventory is climbing, not declining, which is what usually happens this time of year. Demand is decreasing, which we normally see, but a little bit steeper than usual. Interest rates are at a 22-year high, which is one of the reasons why demand is decreasing. And yet, units sold are higher in some areas than they were a year ago. More homes are selling now than they were last year in some of these areas, which is fascinating. Sales prices above list prices. Usually when you see inventory going up and demand going down, prices come down. That's not happening. And still, 50% of homes are selling in 2 weeks or less. So we are definitely in uncharted waters. And we're not sure where it's going to go. We have to see if interest rates are going to come down. That's going to create more demand. And with a restricted supply, could be even a bigger problem. So yeah, uncharted waters. Kind of similar to Gilligan's Island. Just kind of had to throw that in there because I thought that kind of reminded me uncharted waters and what happened to those guys. We'll have to see what happens to the real estate market. Don't forget to scan the QR code to track your home's value. If you have any questions about any of this information, if you want the full sales report, feel free to let me know. Send me an email, give me a call. I'll be happy to send it to you. That's it for this week's Monday Market Moment. Hope you have a great week.
You've been watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email request to brian@devorerealtygroup.com.